For more on this, let's bring in Breitbart economics and finance editor John Carney. They were fiddling, these regulators and the government officials, because First Republic's been falling apart since Silicon Valley Bank and Signature went under.
Absolutely. We've been talking about it nonstop, that this was the bank that everybody has been looking at and saying it's coming next. It's a huge bank, $230 billion of assets. But the thing that has set it off most recently is they had a huge run on deposits. They just disclosed that they lost many more deposits than people thought. So the depositors didn't say, okay, well, they backed up, Silicon Valley Bank. Now this one will be okay. Instead, they said, I'm getting my money out of that thing. I don't know if they'll be guaranteed. The government has been hoping somebody would come forward to try to buy this bank. Nobody wants to buy the bank because its assets are all underwater. They have, tons of mortgages. They lend out to very rich people for like 2.5, 2.25%. And now you can't get a mortgage for, less than 6% if your credit is really good. So those mortgages, no bank wants any of these assets. If you bought it, there was a great story by a friend of mine at the Wall Street Journal, Teles Demos, and he said, if you paid $1 for this bank,
you can hold it up with my red marks all over it.
He said, if you bought this bank for $1, you might end up paying $30 billion for it. So there's no private solution to this. This thing is almost certainly going to
But didn't large banks step in and give it $30 billion?
Yes.
But now they report that they've lost $100 billion in deposits. I mean, we thought the $30 billion would shore them up. Not a chance. They lost $100 billion in deposits,
That's
as
right.
I mentioned.
There's been a run on the bank. Basically, the customers do not, and so this is another problem. They have a lot of customers who apparently had very large deposits. That makes it very easy to take it out. Most people can't take $1 million out of a bank because they don't have $1 million in the bank. That money is not insured, and if I had $1 million in the bank, I would not, just hope that I get the same good deal Silicon Valley Bank did. Especially because there's a lot of backlash against that. The regulators aren't going to want to say, yeah, we're going to make everybody whole again. Because at that point, why do we even have a limit on FDIC at all? Right? They'll be basically declaring there's no limit.
Well, for the most part, since 2008, the way the FDIC has handled these when the FDIC takes the banks over and then finds a buyer in receivership, they still make the depositors whole.
Yeah, it's very rare
American people don't actually see that happen, but it's very rare that a depositor loses a dime since 2008. Congress, you guys, you putting the pressure.
That was Dodd-Frank. That wasn't there for that. Don't put that evil on me, Dagan McDowell.
But the danger is these loans are distressed. Mm-hmm. And it can't just be these three rich people banks. These loans suck to high heaven across the banking system.
One of the things that happened was during a period of very low interest rates, we saw a few of these banks, Silicon Valley Bank and First Republic is one of them, that grew really rapidly. Mm-hmm. And so they have a lot of these loans that are, 30-year loans at 2.5%. And we're never going to get to unless this crisis actually pushes the economy into the tank, we're not going to have a 2.5% mortgage again. So these loans are so they're not getting refinanced, they're not getting taken out. Those loans are going to sit on those books forever. And you can't find somebody to buy it because if you were a bank and you had a choice, I could go buy those underpriced loans, or I could make new loans at 7%. Which you're going to do? It just doesn't make sense to buy the 2.5.
No, I'm saying that these are garbage loans, though.
No, I know, I agree with you, but I want to get your take while you're here on this because there's been predictions that we're going to go into recession for the last year. It's going to come in the next quarter. Well, no, it's in the next quarter. And still, again, we have predictions that the U.S. economy is tilting into recession.
Sure.
What's happening, John?
So right now, actually, the economy is still growing. In fact, there's
1.1% last quarter.
1.1%, but there's been some signs that things may have reignited a little bit. Like April may have been better than March. So this is pushing back. If you look at things like the housing market, for the last 4 months, we've had the Home Builders Association saying that home builder sentiment is getting better. That's not really what you would expect on the verge of a recession.
Right.
So what I've been writing at the Breitbart Business Digest is that the recession is coming. We know it's coming, but it's not coming yet. It's probably not coming it didn't happen in the first quarter. It's probably not happening in the second quarter, maybe the third, maybe the fourth, or maybe even next year.
Are you Chicken Little?
I'm just,
if there's going to be a recession at some point in the future, there will be a recession at some point.
Right.
In the
No.
future.
Well, I will say that the yield curve has been inverted, and this does not happen, right, unless you're going to have a recession. The leading economic indicators have all been saying we're going to have a recession. The consumer sentiment numbers all say we're going to have a recession.
Manufacturing?
Yes, but manufacturing has slipped. Housing is recovering, which is weird. And so we are going to have that recession. That is going to happen. One thing I will say is if you look at the supply of money, it didn't really start to shrink until last June or July.
Yeah.
And so that, and a lot of people thought it started to shrink in March when the Fed first raised rates. So that's probably pushing back the recession date.
Here's what triggers it. Bank failures. Banks stop lending money. Boom. John Carney, thank you so much.